Welcome to the Professor Lending Institute, where we make sense of housing economics and the home buying process. I am Jordan Steffaniak, president of Professor Lending, licensed loan originator, and your home buying professor. In today's episode, I'm going to explain the different types of loan products that are available to you. I'm not going to cover every single one in detail. I'm going to cover some of the main ones and some of the one-offs out there so you have at least a general sense for what might be available to you and might fit your situation. So let's go ahead and get started. But before we do, remember to like the video if you found this useful, educational, or helpful in any sense. Share it with your friends and family who might be of benefit from this. And then do subscribe to the channel so you don't miss anything. And then comment if you have questions or additional ideas. So let's go ahead and start with the two main categories of loans. You have QM loans and non-QM loans. What's QM? It's qualified mortgage. That is a new terminology that came out of the housing crash, great financial crash, recession of 2008. Before that, we didn't have this thing called qualified mortgage, and now we do. And so these are certain loans that meet certain criteria of you are qualified financially to actually get this. There are income requirements to obtain this loan, and so you are much more responsible, and there's much more security in these loans. The three main ones you're going to look at here would be things, or I guess there's other ones, but let's just talk about them. Let's talk about four main ones, I guess. Conventional loans. That's what most people are getting. Just a standard vanilla conventional loan. If you go to your bank or you go somewhere else, it's probably a conventional loan. You have VA loans, which are government-backed loans for veterans. You have USDA loans, which are government-backed loans for rural communities. And then you have FHA loans, which are government-backed loans for lower income and poorer credit communities. And so you've got these main characteristics of QM loans, and you've got non-QM loans. So there's all sorts of non-QM loans out there. There's a thing called DSCR loans for real estate investors usually that don't require any income documentation whatsoever. Bank statement loans, you have P&L loans, you have asset utilization loans, you have HELOCs, you have HE-loans, you have the hard money loans. You've got all sorts of things that go in this other bucket of non-QM. Most people that are coming to watch this video probably are not watching it to learn about non-QM loans. Most people who are doing non-QM loans are probably investors already and have experience doing those sort of things and don't need additional education on what those are. Though if you do, drop a comment and I'll make a video about them. So let's talk a little bit about these main sort of vanilla QM loans. So conventional loan, there's not much to say. That's what most people get. You need a 3% down payment in order to get the conventional loan, so it goes up to 97% LTV, the loan-to-value ratio, just taking the loan amount divided by the value of the house or the appraised value, whichever is the lesser. So if your home was valued, let's say you were buying it at $300,000, well, it's not always the lesser. You bought it at $300,000. The appraised value came in at $280,000. That loan amount's going to be based on the $280,000, unfortunately. But if you're buying it for $300,000 and the appraisal comes in at $320,000, you're still only getting it at $300,000. So it's unfortunately getting the worst of either scenario. So conventional loans, I mean, they're depending on the lender, you're going to have different credit requirements. There are a general standard set of, it's typically to 620. But there are other lenders who will make exceptions to these and then lend on lower credit scores. But it's always going to be that 97 LTV, though there are sometimes down payment assistance programs that help with these conventional loans in various ways, but they're going to be that 97 LTV, typically at least 620 FICO, usually more than that. And debt to income ratio is usually about 45, but there are exceptions that can go higher upwards of 50. Though that is not as common as it was for a brief period of time. VA loans are the most interesting ones, in my opinion. One of the best loans out there, probably the best loan out there. So if you're a veteran, you should definitely get a VA loan. You go up to 100 LTV. There's no mortgage insurance, which I guess the conventional, they come with mortgage insurance if you have less than 20% down on the house, which mortgage insurance isn't bad. I'll do a video about this eventually. I love mortgage insurance. It's great. It's actually extremely valuable. And there's a ton of misconceptions and misunderstanding about what it is and how to cancel it and all those sort of things. Let me know if you want me to prioritize making that video, and I will. So no MI on the VA loan. They're usually about a half point better on rates. I mean, it's usually significantly better. That it's better. So VA loans are going to be a better rate for you usually. That's not always the case, but it usually is. You go look at today's average rates, mortgage rates, and you'll see that usually the 30-year VA is lower than the 30-year fixed conventional. They're assumable. They have options for streamlined refinances. And so the value of this is not just that you can refinance the loan, which you can do in a conventional loan. It's that if you refinance a VA loan, you can do that without income income qualification. You can do it without an appraisal. You can do it without all sorts of things. There are qualifications on this that you need to meet. You have to wait at least 212 days from the first time you originated the first loan. Your rate has to go down at least 0.5 point. And there are other aspects of it. But the cool news is no appraisal. It's so in a sense, it's truly streamlined. No income verification, all those sort of things. That's awesome. You also have a USDA loan, which I think is another great loan. It's government subsidized once again, and you don't have to do a down payment. You can do 100% LTV. There are no cash reserves that are needed on this, and closing costs can be financed in some of the transactions. Seller credits are allowed. You do have to have at least a 620 FICO, but that's another wonderful loan. I do a lot of those in the area that I'm in, where there's a lot of homes that are in USDA eligible areas. So if this is something you are interested in and want to consider, and the rates are typically lower on the USDA as well, then you need to go to the USDA website to check your eligibility. I'll try to remember to drop a link to that website in the description of this video so you can go check it out for yourself and see if the property you're looking at is in a USDA eligible location. So those are the main sort of loan products. There's nothing really fancy or there's no dark magic out there where somebody got something really special that only some people have access to that you'll never find out about. No, you typically just have conventional loans. You have FHA loans, which they have mortgage insurance, their own sort of mortgage insurance. They have less stringent credit requirements. They're going to be usually a little bit more expensive overall, but that's because they're priced in for the risk that's there. So you have your conventional, your VA, your USDA, your FHA. I tend to say if you can get a conventional, you need to get a conventional. If you can get a VA, you definitely need to get a VA. If you can get a USDA, I would get that. So my priority would be probably VA, conventional, or USDA, and then under that, then you would go to the FHA if that was the only option. Now, like I said, the non-QM loans are usually for investors or for other sorts of people. So there are some people who don't make traditional W-2 wages. They are self-employed and they're doing other things, and they can't qualify on a normal conventional loan. That's where these bank statement loans or these P&L loans can come in, or these people who they're retired and they don't make any money anymore. They don't have a job, but they have huge assets in there in different accounts. There are different loans that can use just the assets and qualify you on that. And so those are sort of like the one-off scenarios that you can use for those non-QM loans that can be valuable depending on your situation and your scenario. Or if you're an investor doing the DSCR thing, which is basically just, let's look at the cash flow. Let's look at the amount of rent that you're going to charge, and let's look at the monthly payment. If the amount of rent is greater than the monthly payment, then it's probably going to be approved. And now you can do less than that, but there's no income verification. It's as simple as that. It's just these two things being divided against one another. If you're greater than one, then you're in good shape. If you're less than one, then, well, we need to do a little bit more checking on this. And that's really all there is to it. So that's what I've got here on the loan products. I didn't want to go into too much detail into each of these. I mean, there are lots of resources online that I'd be happy to talk about and share more with. There's lots of intricacies with certain aspects of these. The VA loan has all sorts of intricate sort of calculations on different residual income and all these different things. But suffice to say, the VA is a fabulous loan, and if you are a veteran, you should definitely take advantage of this. There are requirements, the certificate of eligibility, and that you have to have, and just to know if you have any entitlement and all this kind of stuff. But those are questions you can ask a licensed loan originator to take a look at and say, what are my options here? What does it look like for me? So knowing your options is good. That helps you when you go into a conversation, but you also need to have someone who knows what they're doing and knows all the options themselves and can make sure to secure the best option for you. It depends on your situation. Maybe one of the options is not better than the other. Maybe you're buying a really big house and they're jumbo loans, and you need to know which loan products are eligible for a $3 million loan amount or whatever it is. You got to have someone who knows what they're doing to help make sure that you're getting the best situation or solution for your scenario. And that's why I founded Professor Lending, and that's why I record these videos, to help educate as best I can in these informal settings, so you don't feel like you have to have a conversation every 2 seconds. Go into somebody's office to ask all these questions. You can just kind of watch them here. Low key, low intimidation, no intimidation environment, and start getting answers. And then you can come with more informed opinions and start asking more questions. So hopefully this is useful. Let me know if I missed anything. I'd love to chat about it further and record a video in the future.